So today we are joined by a very special guest, Gary Langley, aka the Scruffy Trader. And Gary has actually 2 decades worth of trading experience. He's a funded trader, educator, and investor, and has helped many other traders get funding as well. So I hope you enjoy this episode. Let's jump in. So, Mr. Langley, how's everything going?
Very well, you handsome little devil. How are you?
I'm not too bad. I'm not too bad at all. So I wanted to pull in a favor and bring you in to speak to us because you're a trader that has got a lot of knowledge. You've been around the block a couple of times.
You call me old again.
I and I feel like you've got quite a lot of tips that will help, especially the beginners, but even the intermediate traders or even the traders that are close to getting to a profitable stage, but they're not quite there yet. A lot of people think that you're not profitable, then suddenly you're profitable, and they forget there's a lot of parts in between. And you're very good, especially with your community and everybody that you've helped in the past. You're very good at helping people understand what it really takes to actually become a profitable trader. And we're going to dive into all of that today. So, first of all, I want to go through your journey. And I know we've done this before
Okay.
with me many times, and I've heard this story many times over a lot of beer, but we want to hear it again. So, tell us a little bit about yourself, how you got into trading, your professional background before, because that is super, super interesting because it's a very unconventional way that you got into Forex trading, and we'll take it from there.
Okay. Well, for those of you who don't know me, everybody just calls me Scruff. Now, believe it or not, I'm relatively tidy today. I actually polished my head for you today, kid,
Yeah.
because normally I look like I'm through a hedge backwards. But when it comes to trading to me is just a job. And that's how I became a trader. I didn't know what a trader was. I had no interest in being a trader. I didn't watch any YouTube videos or anything like that and think, oh, there's a way to make money. It was a natural transition into trading as part of my job because I was managing director of a fairly large mail order company. And part of that process is buying products in the Far East. But they don't want pound notes. You know, they want dollars, they want yen, or if you're in Europe, they want euros. And the route into it actually came from me buying a container of goods with one of my distributors. So you start with wholesalers, go to a larger wholesaler, you outstrip them, you go to a distributor, and then from a distributor, you go direct to source manufacturer. Well, in this distribution meeting, I was having a chat, and I'll give a salute to Pete because I still speak with him and I love him to bits. I was trying to get the price now. Now, when you buy a container of goods,
Mhm.
not exactly cheap. You're not spending a couple £100. You spend tens of thousands of pounds on these things.
Yeah.
Anyway, I'm trying to get the price down because we're getting killed on profits, etc. And he's going, I can't do it. I can't do it. I was going, come on, Pete, I'll buy more off you. I'll up my target. You give me a 1%. Let's do the deal. Just been a little bit of to and fro. And he's going, I can't do it. I can't do it. The exchange rate's against me. And I'm like, who gives a fly? All right. But I had a guy who worked in my office who was an ex-commercial bank manager. And I'm going to give a salute to him as well, Jim, because I love him a bit. Ancient now, but because I'm old. But he was in the meeting and he used to look after all the numbers in the office and one thing and another. And he just turned around to Pete and he says, do you forward purchase by any chance? And Pete goes, yeah, I did. And we got it wrong. Now, to me, that didn't mean anything. But it hit the light bulb in my head because it's the worst thing you could have said to me because I went, oh, okay then, Pete. Well, if you got it wrong and you can't do it now, what happens when you get it right? And I could see his little twinkle in his eye going, oh, God, I've just walked straight into this one. He goes, well, we can get 5 to 10% more in the
Wow.
container if we can time the exchange rate right. Because obviously, if you can buy more dollars for your pounds,
Yeah.
it's priced as a fixed price in dollars. Well, that'll fluctuate over the course of 3 months because you put your orders 3 and 6 months in advance. So my first deal was in and around that. I said, right, okay, I'll up my ante. You give me the discount, but I'll do a retrospective rebate. If I don't hit my ante and the deal has gone against you, well, if it goes against you, it's your fault. But if I don't hit my ante, I'll give you that discount back. So it was kind of fair on both sides. Now, as the company grew, because I was MD of that company for 17 years before it shut,
Yeah.
we transitioned from being in the distributor. We still use them, but we started sourcing goods ourselves, which meant we had to forward purchase currency ourselves. And that was my route in. And then over the course of the last 20 odd years, well, you learn how the markets operate.
Yeah.
And I spent a fortune, went to God knows how many seminars, because you start getting this little bug, a bit of an interest for it. But it was my job. And then when the company closed, I was 47 when it shut. I've been top of the tree for so long. Who's going to employ me? And also, I'm 47. I've got nerve damage in this hand and one thing and another. So there's various other bits and pieces to me.
Yeah.
I always thought I was a good boss, but I was a terrible employee because I like to do things my way.
Yeah.
And I found over the years I was pretty good at this. So this became my job, and then slowly built the funds up to what you see today. And I focus heavily on tasks. So one thing that you touched on about people saying they're not quite profitable. The reason I think they're not profitable is because their desire to trade far outweighs the reason to trade. Now, I'll trade once, twice a day. That's it. I live in the high time frames. I'll figure out what's going on, and then I'll come in the low time frames for entry. But as soon as I'm paid, I'm gone. And that's it. And if you think of it along those sort of lines, this job becomes really easy. Because if you think about this really logically, how many ways can the market move? It goes up, it goes down, it goes nowhere. Well, if it's
Yeah.
going nowhere, it doesn't matter. So you're essentially 50-50 on the point of entry. All you've got to do is decide what that market is trying to achieve on a bigger picture. And even if you get that entry wrong, as long as you've got that bigger picture and direction correct, it'll forgive the bad entry. But people use too tight a stop. They get cut the ribbons. They jump in just because they switch the computer on, and they have zero planning. And that's why they fail. But if you were at your job, you would follow a set of tasks. You do the same thing at the same time every day.
Yeah.
And once you do that, you get paid at the end of the week, you go home, you enjoy your life. To me, that's what trading is. Well, that one shut you up.
Those initial, because obviously I know you now for a few years, but before I knew you and before you actually became this educator and became the person
Well, I
that
wouldn't call myself an educator. I'm no teacher. I'm just somebody who does the job. And when I'm in the group, I mean, I have a merry kickoff with them all the time because I pull no punches. You know, if you're an idiot, I've got no time for it. And if you're a
yeah.
gambler, I've got no time for it. But if I see you trying and you want to get forward, then I'm just the guy who's been there a long time. And I'll go, no, do it like this and you'll be a bit better.
So that's exactly what I wanna touch on is those initial times where you moved from the 9 to 5 corporate and then you were learning how to do this properly. What was that like? Because that's something that I don't think we've ever touched on because there is a little bit of a learning curve. And
Well,
I'm sure even the most professional people now, they went through the same things as some of the people now that will be watching this are probably going to go through. And I want to touch on that.
I didn't necessarily go from 9 to 5 into this. It was part
Okay.
of the 9 to 5.
Yeah.
Now, there's two parts to it though, because my sort of day to day was we tried to plan 2 or 3 months in advance on one thing or another. So you never really looked any further than a daily and a weekly chart. That's about as much as you did, and you look for trends and one thing or another. But as you get the bug and you start going, well, if I can do this on a daily, but it might take you 3 weeks to get into the trade, or you might set a position up that you're going to unwind over a couple of weeks. what can I do in 5 minutes? Because the market's like this. And what you find is it kind of sucks you in. And you do go through the gambling tendencies and the excitement and all of this. Now, I come from a corporate background prior to having my own business. I worked in the medical sector, and I did really well in that. But when I got to 30, I just thought, can't do this for the rest of my life, and I start my own business. So I was reasonably grounded when I started, and business school and one thing and another. So I had a good understanding of that. But the biggest thing that I had to overcome was myself. Now, Jim used to often tell me, I'm going to let you make your mistakes. And I'm like, well, what? You meant to show me how to do this. He says, no, there's nobody telling you what to do. So you've got to tell yourself. And my biggest turning point was when I hit a huge loss.
On the
And I
DAX.
think every trader, every single one, needs a defining moment that makes or breaks you. Now, I think if you have a huge win, that is worse because now you're
100%.
indestructible. You can be brilliant. And I was at that point where I had it off pat. I pretty much knew what I was doing, and I'm better than the market. That was my thought process. But I was arrogant. I was horrible, and that's the way it is. But then the market showed me who's boss, and it wiped out an entire account that I'd spent a long time building up in about 4 days.
And that was the DAX trade. Do you want to just?
It was a DAX trade, 2015 French election. I know it to the hilt because I'd spent some time building up this account. I got it to about 18 grand from pennies all the way up. And I was so proud of it, and I was like, this is the way forward. You're getting your yacht brochures out, all that sort of thing. And I just completely thought I was correct. And I travel a lot.
Yep.
So I decided to go for a little mini break over Portugal. Sure, it was Portugal. And I had a position on the DAX. Well, French elections were coming and news spikes and various other things, but I wasn't really fully aware of all that at the time, as how important it is to be aware of what's going around. Anyway, went the opposite way, gapped up, and normally everyone says, oh, well, fill the gap. Well, it did. It took to fill it, and in the meantime, it kept on going. And when I came back on Tuesday, the thing was gone.
Wow.
A whole lot, wallop. And this is before ESMA rules. So it just took the whole account. It wasn't all of this shut off at 50% or anything like that. Whole lot was gone. And I was like, oh. And that hit me really hard because it was at a time where the company was doing okay, but it was struggling a little bit. Because you had the rise of Amazons and all these other sort of online platforms eating into the marketplace and pushing the profits down. And it kind of hit me hard. And it was a real wake-up call as to, you are not as good as what you think you are. You've had a good run, but that's just showing you who's boss. And then because of that, it humbled me right to the ground. And I had to rebuild from scratch. But for the first 5 or 6 weeks after I had that hit, I couldn't really hit the keyboard. Almost snake bite fearful, because everything I did was it was wrong, and I started second guessing it and one thing and another. And then a friend of mine just said to me, he says, well, you must have been doing something right to build it in the first place. I was like, oh, okay. And then I kind of stepped back.
Yep.
Did my position sizing. It was oversized to the account. Clearly took too much leverage on. I was arrogant with stock placements and sort of entering the market. It was always a case of, I'm right, and that's the end of it. And it just proved me wrong.
What did you do to build yourself up from there? And I'm not talking about the account, more your confidence as well, because that's a big confidence hitter as well.
It was, and that's where a lot of my sort of mantras that I live by come from. It all comes from that moment. You hear me say score, stop quite a lot. Now, all that means is if I've been in the market twice and I've won twice, I'm not going to tempt fate for a third time. I will walk, because the markets rotate throughout the day.
Yep.
Now, and then when you analyze your trades going backwards in time, if you were doing back testing, well, it's a perfect scenario. You'll always go, well, that system works. It's amazing. But we all know a moving average cross system, if you like. If you back tested it, they're outstanding. But to do it in the moment is quite difficult. And it's like plotting an Elliott wave. An Elliott wave isn't an Elliott wave till it's an Elliott wave. In
Yeah.
hindsight, it's amazing.
Yeah.
But in the moment, you can't see it.
It's difficult to see.
So I had to physically go through what I was doing. And I figured out that every time I've gone to sort of try and tempt fate, I get a slap. Every time I oversize the account, I might be right, but the account can't take the size. Every time you put in a mega tight stop, so you think, oh, well, I'm only going to put in like a 10 pips stop. Well, you're offside the moment you press the button. So it's not a 10 pip stop. It's really just a sliver. And the market will probe. If you're on the DAX, for argument's sake, it'll probe 10 pips in 30 seconds. It'll just rip you a new one all the time. So I had to concentrate heavily on where I would get out. And I was already doing DCA anyway as part of sort of the forward purchasing. Constructed that into a micro version and then started dealing in money and not the fabled RRs and everything. I deal on ROI, return on investment. So I'm willing to pay X amount for a trade, and then that's it. So the stop has one job, protects the account. The ROI makes me ask the question, is it worth it? Well, if I think the trade is worth it and I'm happy to pay that against the account, then I'm happy to go into the trade, and then the profit just looks after itself. All these little things came in, and then I had a big thing made on my wall. And it started with a post-it note: "Is less is more." The least I'm in the markets, the more I seem to have on a Friday.
Yeah.
And these are the little things. And then when I started slowing down and just building up gradually, what I found was my discipline increased tenfold. Because instead of going at the market 10 times in an hour, I'll be lucky if I've gone to the market once in 10 hours. It made you look for the golden shot, which kept your win rate high. And if your win rate's high, it naturally gives you a nice feeling. But that feeling also needs to be controlled.
Yeah.
Because you've got to control the fact that, well, yeah, I'm winning. And then the arrogance comes out. So you've got to sort of get yourself into that as well. So working on yourself is far more important than working on a chart.
Those parts of working on yourself, I think the most underrated and understated parts of trading. And what kind of things do you think are the biggest blind spots and hiccups for newer traders?
Misinformation. There's such an over expectation in this market. It's unbelievable.
Yeah.
You watch any YouTube video, TikTok or whatever. It's like, oh, I flipped this £1,000 into $1 million. Have you? You got any idea how much margin's involved in that? You got any idea how much stress is involved in that? It's not feasible. You can flip a small account relatively quickly into quite a few £1,000s. But when you start flipping £10,000 into 100,000 and 100,000 into $1 million, that ball game changes altogether. And your initial percentages are huge, but as you go higher, the percentages come down. And it all comes back to this. If you're looking at a couple of £100 loss, it's not the end of the world if you've got a bit of money. If you're looking on a micro account and you've got a couple of quid loss, well, Christ, not even a can of Coke round where I live at the moment. Now you imagine looking at 10,000 loss. How would your brain focus with that? It flips it on its head. So now you'll start making the stupid decisions. You'll be terrified of the loss. So you'll naturally think, well, I know that the stop should be down here, but it costs a fortune if it gets there.
I'm going to pull it in.
You'll pull the stop in. because that's what everybody tells you, tight stops and everything. Well, all that happens is you're inviting the market to come and get you. So you start changing your habits the bigger it gets. Now, these are the things that nobody prepares you for. You've got to learn this yourself. And newer traders' expectation is, well, I'll just flip it and I'll flip it and I'll flip it and I'll be a gazillionaire and I'm going to drive the Lamborghini. And then after about 3 months, they realize, well, this ain't quite right. Don't like this. This is a slam. It's no good. It's bollocks. You're right. It is. But if you did the job in the first place and you look to build something up, then the job's wonderful. So
what are those first?
Is where I think it is.
What are those first steps then? Let's say somebody watching this podcast, or they've just come in and they've just seen some YouTubers talking about how much money they can make in trading, and they're looking for a playbook right now.
Playbook.
To get started in trading. And we know what it takes. But what would your initial parts of that playbook look like for them to actually be successful in trading? What would be the
the first thing is look at what you want to do from trading. Are you wanting to be a full-time career? Do you just want it as a passive income, or do you want it as a hobby? So you need to know which category you're sitting in. So if you want to be a full-time trader, you need a decent amount of money behind you in order to become that trader. So first of all, you've got to ask yourself, have I got the money in the first place? Well, if you haven't, by definition, you can't be a full-time trader. You're going to have to be either a passive or a hobby trader and build up into that. So again, it comes back to your expectation. Where do you want to be? Right. The other side of it is what kind of time scale are you giving yourself? If you're a complete beginner, you need at least a year. Not only I can get you, I'm not joking, I could get you the technical skills in a single afternoon doing a one-to-one with you. Right. I really could. Because the technical side is relatively simple.
Yeah.
The hard part always has been you. Now, that takes time. Now, there are certain elements that you need to recognize. But now the next part of it is be fully aware of what the markets are. So are you going to be a Forex trader? Do you want to be a commodity trader? Do you want to be swing trading because you haven't got time or you haven't got the personality to do day trading? So you've got to find out where you're sitting. So, and these are all the questions you need to be asking before you've even switched the chart on. So am I going to be a full-time trader? Is it going to be part-time? Is it going to be a hobby? Do I want to look at this and get the action now, or have I got the discipline to hold it for a few days and decide whether you're going to be a swing trader? And for those who don't know what a swing, well, I personally think there are 4 disciplines to trading. You've got position trader, you put your position on January, you close it about a year later or whatever. Swing trader, past 24 hours to a few weeks. Day trader, trading within the 24-hour period with maybe 2 or 3 trades with good meat on the bones. And then a scalper where you're just in and out the market for 2 or 3 ticks. So you've got to decide which one of them 4 you want to be. Then you need to find a chart that can do it. Now, if you swing trading, it doesn't matter. It can be anything. Same with position trading. But day trading and scalping, you need a market that is going to actually reward you within the 24-hour period. Now, if you're on euro pound, it's not really.
These days it moves. These days it's been moving.
Yeah, but it's not brilliant. It's still relatively low ATRs, so you've got to figure out what an ATR is, what the average true range of a market. Now, if it's below 70, you're going to struggle to get 10 pips because it's more than 10% of its move, and that is difficult. So you really want a faster market. So you've got to assign yourself. Then only look at a small basket. Too many times I see too many people looking at too many instruments across too many time frames and too many at the same time. No, drill it down into maybe 3, but 3 different that are correlated. Now, to me, that would be gold as a barometer, cable. Yep. Well, I live in the UK, so it's pretty pound dominated for me anyway. So pound USD and the FTSE. They're loosely connected, but they're different enough that you won't be wrong Because if you're trading, say, euro, dollar, and cable, they move roughly the same. Well, if you traded them both at the same time, if you're wrong on one, you're wrong on the other. At least if you've got three different disciplines, you've got an opportunity to see it. But because they're loosely correlated, you can see the ripples. So if gold spikes heavily, it'll put pressure on to the USD because they are connected. That's going up. In theory, the US is coming down. If the US is coming down, it's connected into pound US, so that'll push the pound up. If the pound's going up, that means it's very expensive to do business in the UK. No one's going to invest. Therefore, the FTSE will come down. So they are loosely connected. So it's understanding how the markets correlate as well. But then drill into how to mark a chart up. Because if you can't mark a chart up, you're knackered. And you've got to think, who runs that chart? Well, let's put it another way. Can you move the market?
With my my CFD derivatives, my asset?
Yeah. Could you do it? Could you move it?
I don't think I could, even with a million lots.
I could, because we are insignificant. Right? We don't even operate on the same wavelength as what those guys do. So if you're going to mark your levels, mark it up where they look. And they don't look at 5-minute charts. They look right up the chart. So you need to understand how higher time frame levels react to low time pieces, because there are two constants on the market. The price is in the same place, whether it's on a monthly or a minute chart, but so is a level. You've got a solid level in place that will ripple through time and it won't move. Well, if you pick the right level out and you know exactly where it's been and how the price will react to it, you've just made a roadmap to that chart. And then just follow the trends. You know, if you want to be counter trending, there's nothing wrong with counter trending, as long as you know that's what you're doing and then you're conservative with your target. And these are the little steps. But if you're looking for the system, you know, you see it all the time with the buzzwords, you know, the liquidity sweep, fair value gap, equilibrium. They don't even know what the words mean. It's rubbish. It's absolute rubbish. The markets operate from money, period. And if you know where the money is going to be consolidating, high time frames, that's your roadmap. And then you follow the money. You know, if it's genuinely going down until it tells you otherwise, that's going down. So every time it pulls high, sell it.
Yep.
Simple stuff.
So planning, obviously, with the first starts of the playbook, you're planning. You're planning out what you want, your expectations, what you want to get out of this, the goals, the markets that you might want to trade, and all of those different things.
Well, think of it this way. Do yourself a 3-year business plan as if you're going to set a business up and you're going to the bank. Now, I know 95% of the people watching this will just go, nah, I'm not doing that. I'm just going to put a 5-minute chart on. There's the moving average cross. I've seen the latest fair value gap video. I'm off. Good luck. But if you sat down and you actually thought about what you want to achieve, now you can work towards it. And it all starts with education. But education is like anything else. You know, if you want to be a mechanic, you go learn in a garage. You want to be a doctor, you go to a hospital. You don't just wake up one day and sort of think, I'm walking around B&Q here, there's a few car parts there.
Yeah.
Oh, look, there's a first aid kit. Just because you're in B&Q doesn't mean you're going to be a doctor or a mechanic. It just means you're shopping. Do you understand what I mean by that? You've got to have a full focus of what you want to be. And if you haven't got that, you fail before you start.
Yeah. After all of your years trading, has it been worth it? Do you think trading's worth it?
Yes. I think it's probably the best job I've ever had. Like I say, I didn't know what a trader was when I started. And I certainly didn't. I mean, I bought shares and everything in my 20s and just sort of IPOs on the post office and telecommunications, that sort of thing. Being a trader never computed to me. And I think you see the glossy side of it all the time. But the reality of it is hard work, but it's incredibly rewarding. Now, it took me a long time to build my account up to a sustainable level. But the beauty, what I love, is one, I'm at home. I'm in my little den here, as you see all the time. But I travel a lot as well. You know that. Every time you ring me up, I'm somewhere else.
Yeah, it's true.
Because my time window is 7 till 10 in the morning, I'm normally done roughly by then. Even if I'm on holiday, while Joanne's sorting her hair out and doing whatever, I can log on. I know what I'm doing, do a little bit. I can be anywhere as long as I've got an internet connection. So, from a freedom point of view, this is amazing. Right? Now, when I had the factory, I had like 19 staff at its height. That was hard work.
Yeah.
You were tied to it.
Mhm.
If I went on holiday, the amount of planning that was involved was unbelievable. And then when I went away, I knew next to now it'll get done. Right? So I never have these worries anymore. Now I can just say to Joanne, I'll go, just grab a bag. We'll go on Monday. And we do it all the time. I mean, I'm away in a few weeks' time. And then a couple of weeks after that, I'm out over into Europe, Benidorm for a good while with the guys. Going to get
Yep.
hammered. But I do it all the time.
What are your thoughts then about prop firms? And I'll give a little bit of context to this because first time I ever
I'm going to upset you.
yeah, first time I ever spoken to, and this is how I got connected with Gary, is because Gary was a funded trader at a firm that I used to be at, and I did a funded trader interview with him. And then we spoke and we got connected on fibs and things like that. And then you kind of took me under your wing a little bit. And, but you don't really like prop firms.
You're
really.
right. No,
so I want to know what your
me
thoughts are
put
these
that
days.
into context.
Yeah.
Right? I think I don't actually like the industry in general. And I don't mean prop firms. I mean the whole trading industry I don't like.
Yeah.
I love my job, but I don't like the industry. And it's because of the way it's portrayed. It's always almost like a casino or gambling. And I'm not a gambler. I don't like it. Now, the prop industry, I think, as a vehicle to get your own funds is outstanding because that didn't exist when I was about. All right. The retail prop industry just didn't exist. Now you've got an ability to sort of basically spend small money, have access to a market, and then use the returns to fund your own accounts. That I think is superb.
Yeah.
What I don't think is superb is some of the rules around prop are very restrictive. Okay, so I'm not a lover of that. I think you should trade the way you want to trade. Okay, as long as it's sensible and you understand that if it's your money that's on the line, I should protect it. But at the same time, I shouldn't be confined in the way I trade. If I want to trade the news, I'll trade the news. If I want to hold overnight, I'll hold overnight. All these different little things. So there's certain rules you have to look at. And different firms have different rule structures. So you've got to know what the rules are and make certain they fit to your style. Because a lot of people come in, they fail a prop challenge because it doesn't fit their style. Then they blame this prop fund. It's not the prop fund's fault. It's your fault for not reading the rules.
Yep.
So what happens is it then goes to forums and everybody kicks off. And I don't do any forums anyway. So, and if anybody's watching this, if you see anything other than my official Facebook, it ain't me. Because I do YouTube and Facebook, that's it. Right?
Yeah.
So you've got that. Now, the other side of it is I'm going to go back to the over expectation. People size wrong in prop funds.
Yep.
I upset a guy in an interview who was sort of like a prop guru sort of thing. And he was boasting about his £200,000 account and one thing. And I goes, how do you size that? He says, what do you mean? He says, do you size to the account size or do you size to the drawdown? He goes, oh, you've always got to size to the account size. He says, you're an idiot. And he looked at me straight away and he's like, what? So you can't say that to me. He says, fucking can. And I will, and I'll do it again. Says if you're sizing to the account size and not the drawdown, it's an over expectation of what that account can give you. Because you lose the drawdown, you lose the account.
Mm-hmm.
So all that is buying power. You want to trade the Dow at £1 a point? Fine. Use the buying power to do it.
Mm-hmm.
But you want to sort of do 3 lots, your drawdown can't take that.
Mm-hmm.
And that's why I don't like it. It's about the expectation and the pushing down the gambling route.
So what you said there, Scruff, because I know that there's going to be some new people coming in here that probably didn't understand what that actually means by sizing by the drawdown. That means the drawdown that you have in your account, the maximum drawdown, or even the daily drawdown, let's say on a 100K account, that is 10%. So you basically use that drawdown and you break that down and use that drawdown as the way that you size the account. So let's say if you're using 1%, then it's obviously 10% of the drawdown if you were doing it that way. That's what you would say. And so if it was a $10,000 drawdown, then it's 1,000 per trade or $1,000 gross per
the way
trade.
I do it is this. I don't subscribe to all the percentage trading. I really don't. Because I come from a business background, percentages come into it to a degree. But everything to me is based around money, how much it costs, how much am I going to get back? Now, I don't consider the account size at all. To me, that's just buying power to open an asset. That's it. Because you can trade euro dollar, it's cheap. The Dow is very expensive. Sometimes you haven't got enough money. The buying power will allow you, and that's leverage. Now, the drawdown itself, now let's just take your equation here and say it's £3,000. You've got £3,000 worth of drawdown. And when that drawdown is hit, your account is gone.
Mm-hmm.
Well, I work to a mantra of £1 or $1 for those who deal in dollar for every 1,000 liquid money.
Mm-hmm.
Now, the liquid money of the account would be the drawdown.
So 3,000.
So that would be 3,000. So it's essentially $3, right? Or £3. That's the maximum size you can put into that. And what that'll do for you is it'll calm your mind down, but it'll also size it correctly to the account, because there's a lot of rules and regulations where they don't like you oversizing. Because if you oversize, you put too much strain on the account, which increases the risk and it might push you over that threshold. But if you work to a mantra of £1 1,000, you're always on the right side of it. And then take your time. That's when we first met and started the prop industry. You had to do it in 30 days.
Yeah, it was teeny. The property industry was only just
like 10% in 30 days. Bloody hell! When I started, if you did that like 20% in a year, even today, if you do 20% in a year, you're a rock star. And then the prop industry pops up and says, "Do it in a month." Well, that's just gambling, pure gambling. But now one of the beauty things, and we spoke about it, and I lobbied for it, and one thing and another, is make the time limits correct. And a lot of them have unlimited time limits now, which is perfect, because now you can trade your way.
Mm-hmm.
Take your time, build it up nice and gently, and learn the craft. So one of the things that the prop does, which I think it does incredibly well, is it teaches discipline.
Mm-hmm.
Because as long as you've read the rules and you know what they are, you now have to be disciplined enough to follow them.
Yep.
And that's what you need in the markets. Now, if a prop fund decides to fold,
TFT, my funded, yeah.
When everything went tits up with MetaTrader and sort of Northern America,
Yeah.
There was a lot of anguish in the markets. And that's why I like my own funds, because my own funds are protected. Mm-hmm. Whereas in the prop, they're not.
Mm-hmm.
So these are the yin and the yangs. But as a vehicle to get to your own funds, it's a very low-cost way to get in. But it's also a low-cost way to learn the craft.
Yep.
Because you're dealing... If you're on a paper account, just off on a tangent a second here. If you're on a paper account, your emotional context is zero. Mm-hmm. You've got no attachment to it. But even if you're dealing with a small account, and like with my group, I get them to go through the modules there. I've done like 52 modules on how to trade it properly.
Yeah.
But then I tell them that they have to do a 30-day challenge and show me that they've done it. And that 30-day challenge is one trade a day across 30 days. And they're like, whoa, 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 I can't do it. And I say, well, here's how it works. If you're profitable at the end of it, you pass. If you're unprofitable, you need to go back and tweak your strategy somewhat. But if you took more than 2 trades on a day, even if you're profitable, you fail because you broke.
Wasn't it with a pound a day? Wasn't it a pound a trade as well?
You can trade as
There's,
down 10p, around 10 pips. Now, at
yeah,
the
I
minute, what
remember.
I try
I
to tell
remember. I
them to do is,
remember there was a time. There was a time a few years ago that I passed the funded account, super 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 happy, and I was super way overconfident, and I came in the day after and ended up blowing it, and I rung you up, Scruff, and I was like, Scruff, I can't believe what's just happened to me,
and what did
and
I do to you? Kick you
well,
straight in
yeah. Then you turned around to me and was like, okay, I've got a challenge for you.
the thing.
£1 a trade for 30 days, and you're only allowed to say, I couldn't do it, mate. I couldn't.
There's no lot of people can.
Because people don't understand how to do something that sounds super simple, but it goes against everything that you naturally want to do. And if you want to be a good trader, or you want to be somebody that's good in this game, you need to go against sometimes the most natural things your body and body and everything want to do.
I'll give you a good analogy of that. A
Yeah.
real good analogy. I mean, first of all, I'll tell you what I tell with the 30-day challenge. 30-day challenge is one trade, one asset.
Yeah.
The reason why it's one asset is because you need to be able to understand how it's built up. Now, if you're looking at the same thing every day, say you're a Bollinger Band trader. I love a Bollinger Band. Bollinger Band, Fib, MACD, RSI, brilliant tools if you know how to use them properly. But most people don't know how to use a Bollinger Band. Now, it has 4 states. Well, if you're only ever looking at one state all the time, jumping from chart to chart, you'll not understand how it was built because it will go from compression to flare to weakness and full collapse. 4 states. But if you can't see it being built and then go back to the first state, you'd never understand what strength is in the market. Now, if you do a 30-day challenge, you would see it day in, day out, and you would see it being built. So that's why I do it. It's really to instill discipline and
Yep.
be able to, because there's no magic formulas to the chart. And people need to get that out of their head. There is no system in the world that is perfect. Reading charts is what you need to do, and then apply a set of rules and criteria of what you would call a strategy as to why you would enter the market. But there isn't sort of this magical thing that happens every day. It just
Yep.
doesn't exist.
Just
It's
doesn't
a
happen.
breathing thing.
Mm.
Now, as an analogy to this, do you play golf?
No, I like wrestling and beating people up. It's a
Well,
bit
so did
better.
I, but then I became golf because I used to do. I was heavily into sort of martial arts when I was younger. But,
Yeah.
but for the golfers out there, I'm a big guy, right? We established that earlier on. I used to play with a guy that was smaller than Juwan, and Juwan's like the size of a tiny weight thing. He beat me every time
Yeah.
because I would get up. The first thing I would do was I'd get the driver out of the bag, and there'd be like a 450-yard hole, ka-thump, right?
Mhm.
I'd hit it as hard as I could because that's the way you're supposed to do. You're meant to hit the ball hard and go for miles. Big guy. This guy, nah, just get a little wood out the thing. Gentle swing, clunk. 150 yards. And it'd be in the middle of the fairway. Mine's in the rough. Take me 3 or 4 shots to get it back on the fairway. Whereas in the meantime, this little old git, clunk, 150 yards down. And then his next one's on the green. And it's really reversing what I was doing. So I'm hitting this thing as hard as I could, thinking that I'm going to hit the big swinger. Occasionally it happens. But he was consistent every single hole by slowing everything down, thump, but only doing what the ball was willing to give him. And the ball was willing to give him about 150 yards. Whereas I wanted this massive 200, 250 yard drive.
Yeah.
So he's using the right tool. I'm using the wrong one. But I'm using what I'm being told to do, which is aggression and smack the thing and one thing and another. He's as smooth as things. So actually doing the absolute reverse is the right way.
Mm-hmm.
But you don't want that because and this is where it leads to, there's a saying in golf: you drive for show and you putt for dough.
Mm.
Trading should be the same. You look for a swinger, it's just a show, and it only happens once in a while. But if you're consistent and you're constantly chipping away, they're
Base
the,
hits.
they're the guys who make the money.
Yeah, 100%. Well, there you go. Thank you very much, Scruff. And do you want to tell everybody where they can find you
No.
as well? No. Well, I'll tell them. You can find Scruff, obviously, the Scruffy Trader on YouTube. He's got a fantastic community. A lot of those traders I have met because they've been in many of the prop trading firms that I've worked in. I've seen them, and they've been funded, and they do really, really well. I've got some friends that's been in Gary's community, and or you do also in-house stuff now as well. You actually did some trips abroad and
Yeah.
loads of workshops and stuff like that recently. I've seen.
Scruff Live.
Yeah.
Hire a hotel out. Everybody comes to the hotel. We have a full day workshop. And there's not many will pull up a live chart in front of like 30, 40 people and just go, right, boys and girls, this is what we're doing. And you've got noise flying backwards and forwards. So if you're disciplined and you know your job inside out, it becomes fine. And Benidorm, yes, went to Benidorm last year. Let's just call that entertaining when we do Scruff with the Sun. It's in the classroom, but because we're out for a few days together, we have a few adventures on the strip.
Amazing. Well, there you go, guys. And thank you very much, Gary, for jumping on, sharing us a little bit about your story and some tips and tricks for some of the new traders coming into prop. And that's it. Well, thank you very much, guys. And definitely go to Gary's channel, give him a follow, give him a like, and we'll see you in the next one. Bye.
Excellent. All the best.